Hello, welcome to World Business. On this edition, we plug into a topic that's changing the way we earn, spend and live. Money increasingly no longer means banknotes and coins. Whether it's payments, currencies, transactions or transfers, most money matters these days are handled online, with digital identities becoming as valuable as physical passports. The lines between physical and virtual economies are vanishing fast. So how far will this revolution go, and is it necessarily a good thing for business and society as a whole? Joining us is author and global fintech thinker David Birch, whose latest work dives deep into how spatial computing, tokenized value and identity systems are reshaping modern commerce. Plus a market update as tech stocks rebound and interest in blockchain renews. Investors are once again betting big on digital infrastructure. Is your business future-proofed for the virtual shift? Let's find out. David, thank you very much indeed for joining us on World Business. Now, there's not a lot that you don't know.
Thank you for inviting me.
there's not a lot you don't know about money in the metaverse. For you, obviously, this is something that encapsulates a lot of what you do. It's very familiar to you. Some businesses, yet though, perhaps aren't as familiar with digital currency, with things like tokens, with the concept of digital identity. Where are we when it comes to the economy transitioning to this new way of thinking?
I think the way to think about it, Guy, is in terms of what's come to be called digital public infrastructure. So if you look at what the IMF and the WEF, if you look at what these people say, they say you need digital public infrastructure for the next generation economy. If we want more productivity in the economy, if we want more efficiency, if we want business, and if we want citizens to live better, then we need to develop digital public infrastructure. And digital public infrastructure really has three components. There's digital money of some kind, digital identity of some kind, and data exchange in a regulated manner. So if you look at digital money as the place to start, we've had what you might think of as electronic money for quite a while. I mean, I can't actually remember. I was in London again yesterday. I can't even remember the last time I saw cards, let alone notes and coins. I mean, everybody pays for everything with their phones. But that's like an electronic version of the money we already have now. What's coming around the corner with things like stablecoins and central bank digital currencies is a new kind of cash, which is actually quite unlike that. It doesn't involve central systems anymore. Now, the reason that's attractive to some people is because it's not from a technological perspective, I hasten to add. I mean, people like me are interested in the technology. The business people don't care about it one way or the other. But the reason why, Larry Fink is talking about digital currency and digital assets and tokenization is because he wants a more efficient infrastructure where you don't have clearing and settlement. In other words, if I take a simple example, I sell you a share in Apple. That involves brokers and dealers and market makers and front offices and back offices and reconciliation and delivery versus payment, payment versus payment, error accounts. I mean, it involves this whole panoply. But if I sell you an Apple token, it just goes from me to you, and the money just comes from you to me. I mean, that's the end of the story. There is no clearing and settlement infrastructure. So this means a much cheaper, much more efficient way of doing business. If you look at what the Bank for International Settlements say, I mean, they're the sort of central bankers club. They talk about the next generation financial market infrastructure being entirely based on these more efficient forms, tokenized money, tokenized digital assets, and the protocols that exchange what people refer to as decentralized finance or DeFi, which is really the protocols for exchanging these tokens. So I don't think it's that futuristic, to be honest. If it was just technologists like me saying it, well, then you might be skeptical. But this is what the serious money people want. They want a more efficient infrastructure, and this is what the technology delivers.
It's interesting, Dave, to hear you describe it as another type of cash, actually, because of course I think for many people we don't often stop and think that the cash, the notes that we use to pay for things, I mean increasingly less often, but nevertheless the notes that we occasionally use to pay for things are themselves abstract. They're a promise to pay something. In a sense, the value in the note doesn't really exist.
To horrible money nerds like me, there is a vast difference between a banknote, which is a claim on central bank reserves, and a credit card, which is a claim on commercial bank reserves. One is risk-free, one has some kind of risk associated with it. So naturally, it would reduce the overall costs if we took risk out wherever possible. Now, if you look in practice, I'll give you an example, Guy. So I'm going to be speaking in Istanbul on Tuesday. I'm giving a keynote speech there. In Turkey right now, the spread on digital dollars, so Tether, Circle, this kind of thing, over actual dollars is already about 4 or 5%. The market has clearly shown that what it wants is dollars that are flexible, that can be transferred instantly, that anybody can own. They prefer that to physical dollars and to dollars-denominated bank accounts. Almost all of the trading, if you look at the trading that goes on in the sort of cryptocurrency world at the moment, almost all of it is stablecoins, 80-90%. I mean, the amount of crypto, Bitcoin and things which are traded is quite small compared to the amount of, it's very interesting, because I think what it shows is in many parts of the world, what people thought was a demand for cryptocurrency was really a proxy demand for dollars. I used to go to Bitcoin conferences and people would talk about how everybody in Argentina wants Bitcoin. I mean, you must have heard the same sort of thing. But of course, actually people in Argentina didn't want Bitcoin, they wanted dollars. Yeah. And the only reason they wanted Bitcoin was as a way of getting dollars. So I think stable coins, and almost all of them are US dollar-based stable coins, I think show you that revealed preference. You put those two things together, you've got digital assets being traded and people are trading them with stable coins, and you have a very liquid, very efficient market.
And Dave, just talk to me a bit about central banks, because we often hear this narrative that central banks are nervous, they're cautious, they want to do test projects to explore what's possible. Are they nervous? And if so, what are they nervous about?
Well, I think there's two parts to that question. In fact, I wrote a book about this as well. I wrote a book called The Currency Cold War, which pointed this out. If you're a central bank and half the people in your country are using dollar stable coins to do their business, then it doesn't really matter what you think about interest rates or monetary policy or whatever. You start to lose control of your economy. And so there's that concern. But there's also like a social aspect to it as well, because a digital currency from a central bank has to have certain social goals, which stablecoins don't. And so, for example, in many parts of the world, people are talking about having offline central bank digital currencies, so that they work if the internet goes down, if the mobile networks go down. A digital bank, a central bank digital currency might have goals in terms of financial inclusion, social justice, issues of social responsibility. Stable coins don't have those. Stable coins are just about trading more efficiently. So central banks have different goals, and I think they are sort of concerned that if they don't have appropriate products in the marketplace, people will just bypass them.
And what about this age-old concern, criticism, if you like, that gets brought up about a world without cash is a world without true freedom, that there's always somebody somewhere able to see and evaluate your activity, whereas in the old days, you were at least completely free and anonymous to go about your business?
That is such a complicated question, Guy, and I don't mean that in any kind of superficial or patronizing sense. It's a really complicated issue. So I think most people would agree that completely anonymous digital cash would be catastrophic for society. If people were able to operate in absolute, completely free of the rule of law or societal norms. It sounds good if you're 12, but if you're a member of a society, it's a very unappealing version of the future.
Can I just jump in there?
So we don't want.
Sorry, Dave. Sorry to cut across you, but why wasn't it catastrophic then when it came in the form of cash?
Because you couldn't just move it instantly around the world. And actually, when anonymity is a complicated issue. You go to, I have these debates sometimes with people at conferences who are telling me that they want to be anonymous while they're carrying an iPhone. And they've got a Visa card in their pocket. It's a complicated issue. We don't want total anonymity for money. It should not be possible, for example, for rich people to bribe politicians or buy child pornography or whatever else it is they want to do, completely free of any consequences. I mean, none of us would want to live in a society like that. On the other hand, none of us want to live in a society where every little thing you spend is tracked and traced and monitored by the government or by other people. So we have to find the right place to put the dial for that, and we have to find a culturally acceptable privacy setting for that. And my observation about that is, I think it's society that should find that setting, not technologists. So as a technologist, I can build a system that goes anywhere on that dial, but it should be society that sets that dial, not technologists. To answer the question about the, just to make one quick point about the banknotes. There's a lot of talk at the moment about resilience in payment systems, because we've seen situations where there's power outages, the internet goes down, there's fires like in Los Angeles, there's tsunamis like in Japan. And so some governments have been saying to people, you need to keep some cash as a backup. But cash-oriented society, people kept a lot of cash at home. And that seems like a prudent thing until a giant wall of water washes it all out to sea, and then you've got nothing. There was an example in Nigeria a couple of years ago. There was a very big fire in a market. It was a very famous event. And traders that had their money in cash lost it all. It was all burned. You had examples from the Los Angeles fires of, actually there were some examples there of people who lost all their cryptocurrency as well, because their devices were burned and they lost their notebooks with their backups in and this kind of stuff. So working out the mix that you need, which includes banknotes, but it means a lot more than just banknotes, I think. So you've touched on a really interesting topic there. That's a show for itself.
It is, and I can remember that a similar argument was put forward when there've been examples of Bitcoin robberies, where there was an argument put forward that, well, this is something that can't be stolen, it's somehow more secure, and then somebody with a gun just pointed it at someone and said, give me your Bitcoin, and they transferred it in the same way that you give cash. But it's a very interesting point you make about that mix. And just shifting slightly to another area where you're a well-renowned expert, and you've spoken a lot about digital identity. You have said on many different programs and many different events that it's identity really that's becoming even more valuable than currency in this new ecosystem. Can you explain more about that?
I do think that, Guy, and actually you can use that example of fires as the example. Like, if my house burns down and all my money gets burned, like, it's annoying and it's inconvenient, and but fine, I'll get by. I can call up the bank tomorrow and get a loan and get some more money. But if, like, I don't know, a mysterious comet from outer space came past and wiped out my identity, then I'm absolutely stuck, because I'll go to the bank to ask for the money and they'll be like, who are you? You know. In the great scheme of things, identity is actually much more important. And managing digital identity in an online world, look at where your next generation of consumers are coming from, Guy. If you're a company, you're looking strategically at the future, where are your customers coming from in 3 to 5 years? Where are those customers right now? Those customers right now are 13 years old. They're in Minecraft, they're in Roblox, they're in Fortnite. They're already living in these. You look at the problems we have right now, because you can't tell whether somebody in one of those spaces is over 18, under 18, between 13 and 18. Like, we can't even do that properly yet. And if we want a functioning, safe online society in the future, we have to have the digital identity infrastructure that we need to make that happen, which is coming together in some places more than in others. But no, you're quite right. I actually do see that as more of a priority.
And it's very interesting as well. Do you think there's a challenge for the industry, for experts, for brands like these huge gaming brands to be able to describe specifically how it is they're building in safeguards so that the public can evaluate whether they think that things are safe or not? Because sometimes I'm a parent, I've got a son and a daughter, both of whom go and play Fortnite and Minecraft, and sometimes when I look into it, I feel that the industry gives me a sort of a black box approach. You know, we've taken care of it, don't worry about it. But I'd love to be able to evaluate it myself.
Yeah, I agree, and I think we have to look for progress in that area. It's not there yet, but you see, I mean, for example, in Australia right now, they're bringing in a ban on under 16s accessing social media. How do you know if someone's over 16 or under 16? How do you know whether under 16 have their parents' permission or under 16 don't have their parents' permission? Like, to get the digital identity infrastructure, we need to make that work. We do need the deployment of the new technologies. I think one of the failures of people like me, to be honest, is that the technologies that we need to do this safely, zero knowledge proofs, cryptographic blinding, the homomorphic encryption, I mean, these kind of things. We have all of the technologies, many of them come out of the cryptocurrency space. We have all the technologies that we need to make this more sophisticated infrastructure, but we haven't been able to kind of get it out there yet. You know, the idea that you could prove online, for example, you could prove that you're between 13 and 18 without disclosing any personal information, without disclosing a date of birth. Like, in technology, cryptography terms, it's trivial to do this kind of thing. To explain it to somebody who's grown up in a world of identity cards and passports and filing cabinets is difficult. And I mean, I have to accept my responsibility in that. We need to help the politicians and the regulators understand this stuff more clearly. You should be able to prove things about yourself online. You know, I'm a citizen of this country, I'm over 18, I have a bank account with this bank. You should be able to prove things about yourself without disclosing your personally identifiable information. And that's the basis of next generation digital identity infrastructure.
Yeah, it's very interesting. You mentioned regulators there, of course. Where are regulators at the moment? Is it possible to kind of give a sort of overview, or is it different in different countries? I know in the UK, the FCA has done a lot of work.
It's so different in different places, to be honest. If I was going to point people in a couple of directions, I would say, actually, I think Australia is quite interesting at the moment. They have the sort of the digital identity framework, a bit like we have in the UK. They have the consumer data right to manage the data exchange. I think Australia is an interesting example. Canada as well has I think you can point to areas where, in the US, you're beginning to see mobile driving licenses roll out state by state, standardized mobile driving licenses. You've just had Android announce that they'll be supporting these kind of sophisticated credentials in Android devices in the near future. So things are rolling out. It's not like there's nothing happening, but we don't have quite the infrastructure together yet that we need, I don't think.
And is there any danger, do you think? I mean, it becomes very fashionable. It's the normal thing to do to suggest that the pace of change isn't quick enough. We need to go faster. More change needs to happen. You only have to look at LinkedIn on any given day to see people going, no, we need more change, more technology, move faster. Is there any sense in which you think companies or even governments might rush in to some of this change and might need to be more cautious about it?
I mean, I think we all accept there's a danger of bringing in legislation too soon and making legislation that's too specific to the technologies. But as to the pace of change, I don't think there's anything we can do about that. I'll give you a very simple example. So, agentic commerce, the idea that you'll have an AI that goes and books your flights and holidays for you. So 2 years ago, probably a little bit science fiction-y. A year ago, you began to see the rudimentary bots doing this kind of thing. Start of this year, you had Operator and things like that, which would access websites and buy things from you. And now we're talking about fully automated commerce in the very near future. You know, the idea that you would ever bother to do a lot of this stuff yourself is, you know, you'd rather do other things, and so would most people. So there's nothing we can, the pace of change is accelerating, and there's nothing we can do to slow it. All I will say is, from a corporate point of view, I think it's a mistake to think that medium-term strategy is about what corporates want to do with the technology and how they want to deploy it. Because obviously big tech is putting this technology in the hands of consumers. You know, when every consumer has an AI in their phone, you're in a business world where consumers suddenly become 1,000 times smarter, literally overnight. And I'm not sure how many businesses have got a strategy in place for dealing with that. You know, if your AI agent is constantly monitoring your savings accounts, to take a simple example, and is using open banking and data exchange to move your money to the places where it gets the best return automatically all day long. I mean, like, I'm sure, Guy, you could log into your savings accounts right now, and in 2 minutes you could go and find another savings account that would pay you a little bit more money. But because you're a normal person, you've got other things to do. You won't bother opening up that other account and transferring the money, you know. But bots don't have other things to do. You know, your bot could be doing that all day long. When all of a sudden you have super smart customers that always get the best interest rate, always use their frequent flyer miles, always get the best deal on groceries. You know, I get these things from my credit card company that only a super intelligent AI can understand. I mean, like, I read the first paragraph, well, here's our fantastic offer. If you stay in one of these hotels on a Wednesday, and at some point in the following 2 months, you stay at one with your grandmother and you fill out this form, you can get I already can't understand. I already want AI to do that for me.
And nobody's got time, as you say.
What happens when AIs do that?
Yeah, very interesting. It's very interesting. I could talk to you for a lot longer, Dave. Thank you. Real pleasure to speak to you. I know for a fact that the audience in Turkey will have an absolutely fantastic time listening to you. Thanks very much for joining us on A News.
Thanks for having me, Guy. See you soon.
Okay, let's cross live now to Nick Harper in Washington, D.C. for the latest on this week's much anticipated US inflation figures from the Bureau of Labor Statistics.
On Tuesday this week, the Consumer Price Index suggested the US economy is improving. The Bureau of Labor Statistics showed that inflation in April was softer than expected, coming in at a 2.3% year-on-year increase. That was below the 2.4% figure that analysts had predicted, and it was the lowest annual pace since February 2021. Housing and energy costs were up, but grocery prices overall were down, and that included one key metric which has has been in the news recently, the price of eggs, which has been driven up in recent months by avian flu. In April, egg prices fell almost 13%, but are still up by around 50% compared to this time last year. But if that's the good news, the US should be braced for the bad news, because the wild card in all of this is the tariffs. The so-called Liberation Day tariffs were announced on April the 2nd, but then paused a week later on April the 9th for 90 days. So this reading for April is not yet a reflection of what the economy looks like with those tariffs in place. The 10% baseline tariff is in effect on all imported goods, and reciprocal tariffs on dozens of countries could be substantially higher if trade negotiations are not agreed during the current 90-day pause. Which means in the coming weeks, US companies will need to decide if they absorb the higher import costs or, more likely, pass them on to the consumer. And all of that means by the time we get to the summer, inflation data and US consumers are expected to be feeling the full effects of the Trump tariffs. Nick Harper for A News in Washington, D.C.
Now let's take a look at how the markets did this week.
From markets celebrating a trade truce to what happened when Donald Trump went on tour, this is the week in numbers. 30% is now the US tariff on imports from China, way down on the 145% that was previously imposed. Meanwhile, Chinese duties on US goods are down to 10%. The big drops came after talks between the two sides, with the US team led by Treasury Secretary Scott Bessent.
We have reached an agreement on a 90-day pause.
The news cheered markets, but economists pointed out that tariffs remain much higher than they were before Donald Trump kicked off a trade war. $96 billion is the value the White House put on a record order for Boeing wide-body jets placed by Qatar Airways, agreed while Trump visited Gulf states. The tour saw a host of deals signed in sectors from AI to oil. In the United Arab Emirates, Trump hailed the country's earlier pledge to invest $1.4 trillion in the US over 10 years.
And all I could say is thank you very much. We will work very hard to deserve it.
0.7% was the surprise jump in UK growth over the first quarter. That marked a rare boost for embattled Finance Minister Rachel Reeves. But economists warn that the numbers may have been flattered by businesses rushing to stock up before Trump's tariffs kicked in. 11,000 is the number of new job cuts at Nissan. The Japanese auto giant will also close 7 factories as it tries to cut costs. Nissan has faced years of turmoil and saw its profits all but wiped out over the past year. Analysts say the firm's aging model lineup means a recovery won't come quick. And 7% was the initial drop for shares in Alibaba after the e-commerce titan missed forecasts. Chinese retailers have been rocked by a price war as wary consumers hunt for deep discounts. Alibaba and rivals are also spending big to grab share in the market for so-called instant retail. That's when products are delivered in 60 minutes or less.
Well, that is all we have time for on this edition. Please stay in touch with all the latest business news on anews.tv and of course across our social media channels. And join me again next week for more World Business.